Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel. It's the beginning of another trading week and today we're going to be looking at two of the newly added Deriv synthetic indices and those are the step index 300 and step index 400. So I know that I have a lot of my followers are into the trading of Deriv synthetic indices and you might not know how to go about trading these particular indices. So what we'll be doing this morning would be to do a regular top-down analysis to see what potential these markets hold for us. So if you've not tried out Deriv synthetic indices, I have a video on the channel on why you should be trying out these particular financial securities because they are very, very fast and very, very profitable. So without wasting much time, let's look at them. So first, we'll start off with step index 300. And as you all know, I do my top-down analysis by using pure price action trading strategy, combining support and resistance, trend line, as well as Fibonacci retracement tool. So we're currently on the monthly time frame looking at step index 300. Now, what I try to always get from the monthly time frame are my key zones as well as my directional bias. Now, to get my key zones, all I simply need to do is to use this rectangular tool to map out the obvious rejection points. So key zones are obvious rejection points on the chart that get to act as either your support or resistance as you go on with your analysis. So the ones that jump clearly or to us are the ones that I get to map out first, and as we go on, I get to make adjustments along the way. So I have this particular area where I have where prices have been rejected severally. You can see the price growth here was prevented from continuing downwards, was pushed upwards. The same applied here. So the same applies to this place. You can see this is a very strong rejection zone where price was rejected severally. The same applies to the one at the top. And then the next area I would like to take would be this area. So now having gotten these zones, the next thing would be to go to the line graph to get my directional bias. Now, what do I mean? If you look at, we don't have much information because, like I said, this is one of the newly added synthetic index by Deriv. I think it was added in November 2024. So, but from what you can see on our line graph, can see that the market made a high, a higher low, higher high, got to make like a double top, came down to make to take out the neckline of the double top, which is this M pattern that we're seeing here. And then price is currently retesting this pattern. Now, the way to go about this mostly is to wait for price to get to this neckline and either continue downwards, but most times price gets to have the liberty of even coming upwards above this neckline, plays around there. Once we notice a change of character, then we can start looking for the downward movement of price. But however, what this is showing us is that we have like a bearish structure in place. So our directional bias would be us looking at the possibility of price coming downward. So at this point in time, our directional bias would be what? Bearish, even though we have like a big bullish candle, because we can however also see that this bullish candle may be here, but we're already seeing like rejection here from this very strong resistance zone. So we succeeded on the monthly time frame to do what we always try to do, and that's to get our key zones and directional bias. So the next thing will be to go to the weekly time frame. Now on the weekly time frame, we try to get the structure of the market to work with, or to see to and also to make like adjustments of our key zones I've gotten from the much higher time frame. And then on this time frame also, we can also try to add our other tools, which are the trend line as well as the Fibonacci retracement tool. So if I go back to the line graph to see what we're dealing with, I can pull up my Fib tool from this swing high to the swing low. Now we can see clearly that we have our price at our Fibonacci retracement golden zone. For those that have been following me, this is usually the zone between the 61.8% and 50% mark. So what we're expecting is that price within this zone, sellers would come in and push price downwards. So that means our analysis from the monthly time frame is in sync with what we're seeing on the weekly time frame. So if I'm to go back to the candlestick chart, I can see that price came into the zone aggressively, but it's currently being rejected. So I can even make an adjustment of this, and we can see that it's aligning with what we have in our Fibonacci retracement golden zone. So this means that our analysis is still on point. So the next thing that we'll get to do would be to go to I can as well add my trend line here. So the next thing that we'll get to do would be to now quickly go to the daily time frame. I call it the tradable time frame, to see what else price is giving us. So from what we can see on our weekly time frame, we can still see that our directional bias will still be bearish, because if I'm even to look closely at this, if I'm to go in on looking for a chart pattern, we can see that price is clearly coming downwards. So we'll go to the daily time frame, and then we'll come back to our line graph. I can take out this fib tool because it has served its purpose of telling me that price has gotten to a major retracement zone. And to do that, I can take this out, and then we zoom in. Excuse me. So now on the daily time frame, price is clearly at a strong resistance zone. So there are two things that can possibly happen here, and it's not just at a strong resistance zone. We can see a big bullish engulfing candle with a retracement into the bullish engulfing, and then now we're seeing, a bearish engulfing candle, a retracement into the bearish engulfing candle by way of this green candle, and then now we're seeing sellers trying to push price downwards. So like I always like to ask, how do we now approach or take advantage of this particular setup? This is a very, very good looking setup. So the question is, how do we take advantage of it? If you look at this market, it's still making higher highs, higher lows, higher high, higher lows, higher high. Even though we now have candlestick patterns telling us that sellers are trying to take control of the market, we still don't have enough to now start pumping in sales. So the first thing I would like to do would be to bring in my counter trend line. So we have this outer one, and then we're going to have the inner one. I can take this out because because of recency bias. So we have this inner one. So the question I asked is, how do we take advantage of this market? First, we can see that there's a possibility of an M pattern forming at this very strong key zone, but we can't go with that. All we need to do would be to wait for price to take out this counter trend line. Once there's a retest, then we can start stacking our sell trades. But like I always say, there's nothing that's absolute in this market. And because of that, and because we're at a very, very strong key zone, if price is able to take out the zone completely, then we can do the same, start looking for what our buy trades. But because from the higher time frame, this market has shown to be in a very, very strong bearish trend, I'll be looking more at price coming downwards. So if we go down to the H4 time frame, you can see that price has given like a strong leg downwards, and then we can see sellers. So even on the H4 time frame, another thing that we can do is that we can add even like a new internal trend line, because the H4 is our one of our entry time frame. I can now have this, I can have this here, I can decide to draw this. So my first entry point will be once I get a break and retest of this trend line, and also when this demand zone is taken out, this last line of demand, this would be like another confirmation for me to enter this particular set trade. So if I'm able to get this, I'm able to get price to come down and take out this trend line, and there's a pullback into the zone, then I can start looking to take my share trades. However, I'll be more confident if price is able to take out this other trend line from the daily time frame, and then I can start stacking my sell trade with the hope to come all the way down here. So like I said, this I'm going to be looking at two of the step index indices. So this is my take for the step index 300. So if you're into the trading of these assets, you can monitor it closely. So before we go to the step index 400, I would like to quickly appeal that if you're gaining anything from this video, to click on the like button, hit the subscribe button, and share with others to gain from it, as well as we hope to help this channel grow. So without wasting much time, let's look at step index 400. And also, just like we um just like we did from the previous index, we'll try to get the rejection zones, which will be acting as our key zones or key points of interest, because each time price got to these areas, we saw the market either we saw the market or price moving away from those areas. So they'll be serving as our what, key points of interest. So having gotten that, the next will be to get our directional bias, and this looks very obvious, because even if we place a trend line, then we can see that this market has been making lower lows, lower high, lower lows, made a lower high, lower low, and the market is currently retracing. And it's not just retracing. From the key zones that we've drawn, we can see that the market is already at key zone. So for those that would have been trading in the much lower time frame, maybe the 1 hour, 30 minutes, they would have been buying this particular market. And if we go down to this time frame, we will see that the market will be in an uptrend. Can see. But because the higher time frame is king, we try to take our analysis from the higher time frame. For those who trade only in the lower time frame, they wouldn't know now that is currently at a very, very strong resistance zone. You can see the sea of red candles that broke this level, came back, it was rejected, and price is back to the zone. So what do we do next? We've gotten our directional bias that this market is bearish, even if the bulls are currently in control, and that we've also gotten our key zones. So the next thing would be to go to the weekly time frame. Now on the weekly time frame, we can see now that the structure of the market becomes much more clearer. So if I include my trend line here, there might have been like a trend line break, but like I stated earlier, the market is at a strong resistance zone. So the point I'm trying to make is that it wouldn't make sense to keep buying this particular market. So what do we do next? We'll go to the daily time frame. Now, some people will say, oh, but this trend line is broken. The trend line is broken, all right, but the most recent lower high that gave birth to this lower low is still way up here. And if I'm to place like a fib 2 here, to see where price has, how much price has retraced upwards, we can see clearly that price is at the Fibonacci retracement golden zone, which is also the zone between the 61.8% and 50%. So everything is telling us that even though this market has been going upwards, it's at a strong resistance zone that coincides with the Fibonacci retracement golden zone. So what do? We have to simply wait for sellers to come fully into those markets, and then we start looking for our selling opportunities. How do we do that? Let me take out this tool to make my chart less busy. But I can go to the daily time frame. Now on the daily time frame, we can see clearly also that we can see that sellers are gradually trying to push price up downward. So the question now pops up: how do we take advantage of those markets? So there are two possible scenarios here. Either price is able to take out this supply zone. If that price is able to clearly break above this, comes back to give us a pullback, then we can look for for buying opportunities up to this area. But in the case where that doesn't happen, when we start seeing red candles at this very strong resistance zone, once we start seeing the presence of red candles, then we can now go to the much lower time frame to look forward our selling opportunities. One of the ways also would be if we go down to the H4 time frame, we can see that buyers have been in control of those markets. So on the H4 time frame, I can add my counter trend line. So once I start seeing candlestick patterns or chart patterns, if for example I'm able to get a double top here, then I can wait for it to be taken out, or I'm able to get like a bearish engulfing candle. I can wait for retracement into the middle of the candle and take my trade. So basically, the point I'm making is even if we have green candles here, the market is currently at a very strong resistance zone. So all we need to look out for now would be what? Bearish reversal chart patterns, bearish candlestick patterns, or we have like a change of character in the sense that though the market is doing this now, if we're able to get something like this at this very strong zone, something like this, we can get a retest and then start selling. So this is what I mean by bearish reversal chart pattern, or a change in character or a change in structure from this upwards to the downwards. So these are my take on the newly included step indices, step index 300 and step index 400. I'll be dropping a video later in the day for those of us that trade forex currency pairs. So this first video today is for those of us that trade Deriv synthetic indices. So you can always compare this with your analysis. And if this makes sense to you, you can drop a comment in the comment section as per suggestions and what you think your own analysis is saying. So if you've gained anything from this video, just like I pleaded earlier, it is only fair that you click on the like button, share with others to gain from it as well. And if you've been following this channel and you're yet to subscribe, I'm pleading with you to do so, as I need you guys to grow. Thanks for stopping by my channel. Thanks for always being a strong support, and enjoy the rest of your trading week. Cheers.